Also, the reality is at this current point in time, a little more than halfway through 2025, as we're starting to go into fall, the housing market is really no longer the wealth building machine that it used to be. And we know this now for a fact just using the most recent inflation data. And I know that inflation and the CPI is vastly underreported, and that will amplify what I'm about to tell you. Because even though home prices are still sitting close to record highs in many areas of the country, home prices are now starting to fall behind inflation for the first time in years, actually. Inflation-adjusted housing wealth has declined over the past year, which has reversed the pandemic-era trends that we saw when real estate actually created massive wealth. Now real estate's kind of like a wealth drainer, as it's not keeping up with inflation, and the costs to own real estate have absolutely surged. The 20-city index for the Case-Shiller report fell 0.3% month over month, which is the fourth straight month in a row that it has fallen. And even though the annual growth is still at 2.1%, the latest CPI report we got was at 2.7%. And since we know the CPI is very, very wrong, and we can probably say it's much closer to anywhere between 5 and 7% at least, well, that means your house right now is losing anywhere between 5 and 10% of its value every single year, just adjusting for inflation. Let's assume that the home hasn't budged in terms of valuation. Your house was worth $400,000 last year. It's worth $400,000 this year. But because of how bad inflation is, it's losing between 5 and 10% of its value every single year right now. Now, a lot of this is also because so much of home values were pulled forward substantially during the pandemic. You know, most areas across the country, home prices went up anywhere between 30 and 50% over the past 5 years. And so you could say that we've already seen the gains. Now that the gains have come to a halt, now inflation is starting to eat away at a lot of those gains that were made. And that brings me to my next point, which is that we could actually see a different type of housing crash this time around, but I think it's going to be a combination of both. Like in 2008, we saw home values come down anywhere between 30, 40, even over 60% in some areas. Well, now home prices are coming down. They haven't fallen by those numbers just yet, but in some areas they have, like in Austin, Texas, where prices have already come down 20%. In Cape Coral, Florida, it's already almost come down 20% over the past couple of years. Those are substantial declines, but along with the declines, you have inflation eating away at any of the gains that were made. So this time you're going to have a double whammy crash. You're going to see values nominally falling across many different markets, combined with inflation eating away at any of the previous gains. So moving forward, the only markets across the United States that are actually going to be seeing home values go up are going to be markets that are going up at a higher rate than inflation. So you need to be seeing home values rising between at least 5 and 10% year over year where you live, just to keep up with the real rate of inflation right now. If you're not seeing those type of gains in real estate, then you're effectively losing money right now. And it's for this exact reason that even me, somebody who sold real estate professionally for 13 years full time and was a real estate investor during some of those years, even myself, I don't have any interest in buying real estate right now because it's kind of one of the worst investments you can buy right now, which is crazy to think about because it's always been a fairly good investment, but it just isn't right now. I think the only way being a real estate investor makes sense right now in 2025 is if you can still find properties that have some sort of cash flow and you are considered a real estate professional with the IRS, and you can deduct all of your expenses that you have with your properties against not only your real estate income, but against your ordinary income, which can save you a boatload of money on paying federal income taxes. If you can do that, then it makes sense to still be investing in real estate right now. But anybody who does that will tell you that it is a full-time job and your risk of an audit is very high, as you got to be spending over 700 hours a year being a real estate investor with those 700 hours being meticulously recorded to make sure that if you are audited, you can back up your claim that you're spending your time as a real estate investor, not doing something else.